Hello everyone, and welcome to this video about, it's a study guide for the RO1 exam, or one of the chapters for the RO1 exam. So if you're wanting to become a financial advisor, as I am right now, this video should help you prepare for the exams that you need to do to become a financial advisor in the UK. Now, to become an advisor or a planner over here, you need to be level 4 qualified. There's two ways to do this. There's the diploma in financial advice or the diploma in regulated financial planning. There's loads of acronyms in the industry, first and foremost. The one that I'm doing is the DIP RFP, which is the training material, and it's is created by the Chartered Insurance Institute. There are 6 assessments you need to pass to achieve the diploma, RO1 through to RO6. Today I've started studying RO1, so I'm very early in my journey. Within RO1 there are 11 chapters, and they call them learning outcomes. Today I'll be going through my study notes for Learning Outcome 1 within RO1. Now, Learning Outcome 1 amounts to 6% of RO1 in total. RO1 is Financial Services Regulation and Ethics. It's quite a dry subject, quite honestly. It's not the most interesting, but it needs to be done, right? So Learning Outcome 1 is 6% of that. So what that basically means is you're going to get 6 exam questions out of the 100 that they're going to be. 6 of them will be about learning outcome 1, what we're going to be discussing in this video today. Now, I'm creating these videos, quite honestly, mostly for myself, so there are selfish reasons for it. I found that when I've created educational content for other people in the past, it really helps me understand the subject a lot better. And I'm also sort of documenting my journey to hold myself accountable more than anything. Also, I've managed to get hold of some resources for these exams. I have study guides and previous exam papers. So I've got like 4 previous exam assessments, basically. So if you are preparing for these exams right now and you want them, let me know and I'll share them with you. Leave a comment, or just leave a comment and I'll get in touch with you or something. So let's have a look. So these are the study notes that I've created for Learning Outcome 1 within RO1. So I've always found that when I want to learn something, so I'll ask myself a question and then I'll answer that question, and I somehow pick it up a little bit better. So what are the 4 essential functions that the financial services industry provides? So the first one is to channel savings. This is how banks take their customers' money and reinvest it for profit. So within banks started for this, they are for profits. So depositors and borrowers. So they will take the money from depositors and then they will reinvest some of it, give it to borrowers, or they'll reinvest it somewhere else for profit, right? So I'll give you an example. If they're giving a deposit, or if you put your money into the bank and they're giving you an interest rate of 2%, very few are doing that right now because the interest rates aren't great. So they're giving you 2%. Let's just say you put £100 in, they give you 2% a year. In a year's time, they're going to give you £2 profit. What they can do is, this is a very simple way of thinking about it, is they will reinvest that money, or they will give it. So there's another person over there and they want to borrow £100 from the bank. They will say to them, we're going to charge you 6% interest for you to borrow this money. So they'll give them that £100 and they'll take £6 from them to give them that £100. In a year's time, effectively, they've made a £4 profit. That's just arbitration. That's a very simple way of looking at things. It doesn't work exactly like that, obviously, but that's what this concept is. The second essential function is they match savers with borrowers. So if somebody wants to save, somebody wants to borrow, they will pair them up effectively. The third one is they manage risk. So the financial services industry manages risk. And that's effectively insurance. So protecting assets from damage or loss, which is general insurance, life insurance, reinsurance. That's one other thing, right? Oh yeah, and the fourth thing that the financial services industry provides is diversification. So diversifications is when you want to diversify your assets. So you might have some cash, you want to diversify, so you want to put some into shares, you want to put some into bonds, you want to put some into gilts. These are all ways to diversify, and that's one of the functions that the financial services industry provides. The next question that I have on my study notes is, who oversees the UK payment system? Very simply, it's the Bank of England. There's nothing else that I really need to tell you about that, but they're the ones that oversee the UK payment system. And then, who is the UK payments regulator? What is the organisation established by the FCA that sets strategy for UK payments? It's been established to ensure that UK payment systems and services meet the needs of users, payment service providers, and the wider economy. That's what the payment systems regulator is. Okay, so next one is, what are the two types of stock trading in the UK? So these are reasonably easy to remember. So number one is on exchange trading. So this is trading that takes places in locations created for trading. So stock exchanges like the London Stock Exchange or the New York Stock Exchange. And the other type of stock trading is over the counter trading, or sometimes referred to as off exchange trading. This is where shares, bonds, and derivatives are exchanged directly between two parties. So the easy way to think about it is, one is the stock exchange, and the other one is when you're directly exchanging whatever you are exchanging, so shares, bonds, and derivatives. The next question that I've highlighted from Learning Outcome 1 is, what are the two main types of advisors? I think this was relatively simple for me. So independent advisors, so you might have seen IFAs, independent financial advisors. These are the advisors that can recommend products from any provider. And then the other type is restricted advisors. They can only give advice for a single provider or certain products. But it's in the name, isn't it, right? Independent advisors can recommend products from any provider, and restricted advisors are restricted on who they can recommend. The next question is, what was the purpose of the Financial Services Action Plan? So I don't know a huge amount about the Financial Services Action Plan, but literally the answer is to improve the European single market for financial services. It is what it is. Second, then this one, so which government department is responsible for the regulation of financial services in the UK, and who does this department report to? So it's the Treasury. The Treasury is responsible for the regulation of financial services in the UK, and it reports to the Chancellor of the Exchequer. The industry is governed by two acts. What are they? And I'm not great at remembering these things, so that couldn't be it. So the UK financial services industry is governed by the Financial Services and Markets Act, FSMA, and that was year 2000, and the Financial Services Act 2012, which created two new regulatory authorities. I think these are more important than the acts, maybe. So the Financial Conduct Authority and the Prudential Regulation Authority. What is the PRA responsible for? So the PRA, the Prudential Regulation Authority, is a subsidiary of the Bank of England and is responsible for the prudential supervision of banks, insurers, and major investment firms. The PRA aims to enhance financial stability by promoting the safety and soundness of authorized firms, including minimizing the impact of their failure. So they promote safety and soundness of authorized firms and make sure that when they do fuck up, it's not too bad. Okay, so what is the FCA responsible for? the FCA has an overarching strategic objective to make sure that the relevant markets function well. That's what the FCA does. Make sure that the relevant markets function well. It has three objectives: consumer protection, integrity, and competition. So, protecting the average consumer from financial firms, integrity, and competition. What are the two other ways the government influences the UK markets? So if you've ever studied economics, you will have heard of these: fiscal policy and monetary policy. Fiscal policy is when the government cuts or raises taxes to influence the amount of money in the economy. Monetary policy is when the government changes interest rates to influence the amount of money in the policy, or the government buys or sells gilts, like gilt-edged securities. Next question: who is responsible for the payment of state benefits? This is the Department for Work and Pensions. I don't know why there's a question mark there. And how is this relevant for financial advisors? So the increasing cost of state provision, caused primarily by the ageing population and fewer taxpayers, means that benefits are low and at subsistence level only. This creates a need for professional advisors who can help customers prioritize their spending to ensure that they're taken care of in the event of either death or illness and during their retirement years. So effectively what it means is, because benefits are low at the moment, there is a need for advisors who can help customers sort out their spending and so they're taken care of if one of them dies, or there's illness or retirement or during their retirement years. So like I said at the start of this video, I managed to get hold of some past exam papers or some mock exam papers. So before I actually started studying, I went and did all of those exam papers, or I did the learning outcome 1 part of those exam papers, just so I know exactly what I need to work on what I need to really study up on. So what I did is I made a list of all the questions that I got wrong in those mock exams, and I'm going to be studying more on those. So I've made a list of those, and I put the answer to that as well. So the first question that I got wrong is, how does the UK financial market operate in respect of both investments and loans? It's a bit of a generic sort of question. So one of the answers was, financial intermediaries help transform short-term savings to long-term loans. That's one of the things that we were talking about earlier on. So when the Bank of England announces it will undertake quantitative easing, a financial advisor should consider that typically the Debt Management Office will offer to buy back a limited number of gilts. Once again, this is a multiple choice question, so I went for one of the other answers. But yeah, quantitative easing, they will buy back a limited number of gilts. I'm trying to remember these and make sure that I don't get them wrong again. So the next question that I got wrong was, the tripartite regulators of UK financial firms, when considering issues relating to financial stability, will report to the European Systemic Risk Board. So there was a few of these things that I was unsure about because of Brexit, right? So some of the study texts that I had on some of the past exam papers were obviously 3 years old, and I was thinking maybe something's changed when it comes to Brexit, but apparently not much has changed. So the European Systemic Risk Board. Next question is, what is a discretionary portfolio management service? I should have known this. I went for the other one. So this is where specialist investment managers make the investments for you to meet your objectives. I still gave the client a little bit of control in the answer that I put. So I thought that the specialist investment managers will suggest investments, and you will still, and the client will still have to sign off on them. But this is where they can actually make the investments for the client, according to their objectives. Next question is, what can be directly attributed to the impact of taxation? This is the individual's ability to make investments. I put the wrong answer, but this is as simple as that. So the impact of taxation, the individual's ability to make investments. If the yes, this is one of the questions that I was unsure about, because we're sort of because of Brexit, I thought it'd be a little bit different. So if the EU issues regulations in respect to the financial services industry, how would the UK be expected to respond? It must implement them without any changes. Okay. So, and when determining the interaction between the UK and the EU and the regulation of the financial services industry, the UK government must always implement new EU directives by passing acts of Parliament. Once again, I was a little bit unsure because of the sort of changing political climate around the EU. So, how are UK gilts issued and traded? I got this the wrong way around. I thought new gilts are issued by the Debt Management Office, and subsequent trading is done on the London Stock Exchange. I thought they were issued on the stock exchange, and then, but it doesn't make sense. But it was my first time having a guess at it, basically. So, what discretion, if any, does the Prudential Regulation Authority and the Financial Conduct Authority have over the decision to implement the requirements laid down by the EU in respect of financial services? Once again, I guess wrong. They have no discretion over any requirements. The EU rules. So those are some of the questions that I got wrong. Hopefully that will have helped you. I've summed up Learning Outcome 1 in what I think are the most important things that I need to sort of scrub up on or need to learn a little bit more about. Like, if I show you, this is RO1, right? So it's comprehensive, and it is a little bit dry. It does take a little bit of time reading it. You will have to spend time studying it over and over again. This is some of the things that I think are the most important parts of that, and I have other study notes that have been created by other people that are a little bit more comprehensive than this as well. And if you want access to those, please just do comment below, or if you want access to the exam papers, please do let me know as well. I'll get those over for you. I'm looking to create maybe one video a day. So this is Learning Outcome 1. Hopefully in the next 2 weeks we'll go through RO1, maybe even quicker, because I want to do it quite quickly. So, and another thing, CII's website is terrible, and I'm finding it really difficult to book my exam. I'm going to have to be on the phone to them for like half an hour to get through to them, because it's appalling getting through to them as well. But for some reason I can't do it on their website. It just says, it just won't let me, it just won't move. Also, if any of you for whatever reason think this is financial advice, this is not. I'm just a guy who's trying to pass the to become a financial advisor in the UK, and I'm sort of documenting my journey. Please don't, do some stupid shit as a result of what you've seen in my video or videos. Thank you for watching, if anybody is watching, and if you are, like, so I know some people are watching, and it sort of encourages me a little bit more. Hopefully you got some value from this, and yeah, I'll see you later, guys.